Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so in this video, it's going to be kind of a different format, a little bit of an experiment. Rather than going over one ticker, just going over the chart, maybe going over unusual whales. I'm going to do kind of a deep dive into these four tickers because, really a number of reasons. They all look pretty good. I think the options data does suggest that, but we can kind of dive into that to see, what all of the data is saying following this post that I did put out on Friday morning, so June 27th. I was at work, I was bored at work, and I just posted this unusual whales data, also posted the max pain so we can follow up on that. And the tickers for this video is going to be Webull, ticker symbol BULL, Intel Corporation, ticker INTC, Mara Holdings, ticker symbol MARA, and then Unity Software, ticker symbol U. And there will be timestamps to all those tickers down below. But as I'm sure you guys know, if you do watch my videos, I can tend to ramble a lot. Sometimes I do forget things and might go back. So I would encourage watching the whole video. And even if you're not interested in any of these stocks, I think it will be kind of a nice example of how to utilize unusual whales. Maybe I'll do some deep dives with Grok, exploring some of the companies, and then also going over the charts. And, I guess a disclaimer that I should have for this video. Of course, none of this is financial advice, but for all these tickers, I do happen to hold all of them. I am long all of them. And I have to say, they're going to be swings, though. None of these are for diamond handing, although I will say ones that I do feel really good about long term would be Intel Corporation and Unity Software. And so for Intel, I had just happened to notice a longer term trend line that we came back to at support. I have a very small share position. I've started to look more at calls recently just to give myself some more exposure, but not wanting to raise my average. And then Unity Software, I just think that there's a lot of potential growth for that. With AI, with visualization, gaming, and just experiences, stuff like that. I think there's a lot of potential there. Webull, that's probably the shortest term swing for me. And then Mara Holdings, it's a Bitcoin mining company. That one, I think, will perform very well over the course of the next 6 months to a year in relation to the Bitcoin 4-year cycle. And then another note I do want to mention is that if you guys do watch these videos with either closed captions or dubbed in other languages, please let me know in the comments. It's very interesting for me to know about that, whether you're watching in the US or abroad. That's just useful for me to know, and I believe YouTube does have a closed caption feature that should automatically either, I don't know if it would dub, but I believe add closed captions automatically based on AI. And so if that is a feature that you guys are taking advantage of utilizing, let me know, because then I can try and make sure that that the videos are available to you in your preferred language. And if they're not, it might just take maybe a little bit of time for YouTube to process the video into having the closed captions or be available in other languages. And what I've found is that, maybe it'd take 24 hours from upload, maybe a little bit less. I've noticed that as far as like being able to download videos after I post them, it takes YouTube a little bit of time to process them. So hopefully that is helpful, but I am going to now dive into the charts now, and I'll include a timestamp to this now because I am going to be talking about Webull, ticker symbol BULL. And so first I'm going to go over what I have in this post, and then I'll go over the chart and then look at some unusual whales data. So the first chart over here, if I do click on it, This is a screenshot taken from my phone from Unusual Whales. I do have access to this data because I do pay for the annual subscription, but you can get some limited data from them if you don't have a subscription. And you can also do it monthly if you want to experiment. And they do have, I believe right now, they do have a 4th of July sale going on that will probably go at least until the 4th of July, maybe a couple days after over that weekend. But yeah, what we can see with Webull is this was a screenshot posted during the pre-market on all of these are going to be screenshots from the pre-market on Friday, and this data is though showing the data from June 26th, so that was on Thursday. And what we can see with Webull is that the net call premium is in green. That went up, but not really so much. What we actually saw is net put premium in red go up higher, but then at the end of the day, it did drop off. And we do see that the volume is green, so that does suggest that there were more buys of these, or that these contracts were being picked up, I believe, from market makers. I'm not exactly sure how the volume relates to the contracts. If, when there's a buyer, there's a seller, but I think this would just be opening contract positions through the market maker, so the net volume ends up being green. And so, yeah, I mean, this, to be honest, the net put premium down a little bit over $250,000, and the net call premium up only about $25,000. Neither of those are really, like that crazy. And also seeing the drop off in net put premium at the end of the day, it's nothing too crazy. I could look at, the spikes in the data here, but that jump is, it's probably not going to be that extreme, that exciting. So maybe it's something to look into on Thursday, but really, for this video, I want to look in the data on Friday. And also, I think I meant to mention this at the beginning of the video. Hopefully this format, is enjoyable for you guys. I am really just trying to do what's useful for me, and hopefully it's useful for you guys. And yeah, and we could see, sorry for that little tangent, but we could see this yellow line here. That is the stock price from Thursday. So it did go up a little bit over the course of that day. And so what I did say about these is, of the four, Intel looks best, then Mara. Webull, that I just went over, looks second to worst, which would be Unity Software. And then I did follow up with the Max Payne data that we can see over here. So Webull was 10 for Friday. That may have changed. And the price, the closing price from Thursday was $11.31. So the price was above Max Payne, but did we close the week above Max Payne? And so let's just flip over to the chart. We can see Webull did close above that Max Payne from Friday morning, but did we end the week? Or did, Max Payne remain at $10? So Webull closed at $10.83. So let's come back over here to look at the Max Payne for Friday, the 27th. It was $10. So we did close above Max Payne. Max Payne was not at the money strike. We were in the money. We were above it. And so that is good for the bulls. And then for this upcoming Friday, so upcoming Thursday, because July 4th is on Friday. That's the holiday, Independence Day for the U.S., and so the stock market's going to be closed. And so Thursday, July 3rd, Max Payne is $11. So if Webull can continue to go up and close the week above 11, I would think we're kind of in like gamma ramp territory, and that things are looking pretty good. But yeah, I'm just going to dive into the chart a little bit, just kind of give my breakdown, and then we can look at the options data from Friday and see what that premium data does look like. And so my thesis with Webull was, I noticed this big move up. I don't really like to trade stocks that are super new. But, I was intrigued by this, and then I had noticed this orange line here at $13.40. That was, let's see, on March 28th, Was that the high? Yeah, the high was $13.40, that orange line. And so I thought that might hold as support. We did bounce from it, but we didn't go up that high, and then we did break below it. And so I was looking for another level to be acting as some support. And let's see, I'm just going to adjust that so I can bring it over here before the gap up. We see nothing here because we gapped above. And so here we could see that level 1340. Very nice there. And then this yellow line at 1110. And so I viewed that as potentially acting as support because it was like the consolidation lows over here. And so what I mean by consolidation lows, which I believe that's a term I made up, I'm not really sure, but just not the lows, not a specific level here related to the lows over here, but just generally the lows. And so it looks like the low specifically from April 3rd was $11.10. I just kind of arbitrarily picked that level because all of these candles, the wicks over here, do dip down to touch that level, do get some pierces of it. So that would have been, there would have been opportunities to buy multiple days to be able to buy, to get fills at $11.10. And we can actually go back a day to April 2nd, where the low was $10.94. So right around $11 really is what that line is there. And so that was a very nice dip buy level before the gap up. And, then we did, of course, return to both of those levels, bouncing from 1340, then going up here, forming this gap at around 1641. Coming down, I've got this nice little, white downtrend there, potentially acting as support in what might be a falling wedge. Bounce up to that light blue line, which is really just an extension of this white one there. And let's see, over here did break below the yellow. So now that is with price below 1110, that is going to be resistance. We did get, multiple attempts to get back above that level. And now I'm wondering, if we got this big move up in consolidation, maybe it's a bull flag, maybe it's not. Or maybe, what we see is that we broke out of that falling wedge. And now maybe we're just doing, I'll just doodle it up here. Maybe we're putting in a little inverse head and shoulders pattern there. It hasn't formed yet, but that is a possibility. So I find that to be an intriguing aspect of this. But also, one of the things about Webull stocks generally, but specifically this one, is it's just taking a lot of time. And with that being said, that gets people frustrated, gets people out of positions, it gets people accepting losses at lows, and then we see, massive moves to the upside. And so I think that's what's going on with this. And I also think that with that time component, it also causes the premium of options contracts to go down over time. And that cannot be so great, especially if holding shorter dated contracts. And yes, there's a lot of risk with trading options, but you can also make a good amount of money pretty quickly with it if you do it wisely, which I'm trying to do, but I don't always do it. And I do tend to be a little bit probably overly cautious with getting out of my options positions, trying to take some profit. But anyways, from this little Fibonacci that we have here, going from that low that was hit on June 13th at 10:18, we do have a move up to 1175. So that's how I've drawn that Fibonacci retracement. And we can see that we did pull down to the 618, right around $10.78, having hit a low on Friday, June 27th of $10.72. So maybe that's a dip buy level, maybe that's a nice opportunity, but maybe we could go lower to around 1050 as the 786 is at $10.52. So good to be cautious of that. And if we do end up breaking lower than that, $10.37 is the low that was hit on June 4th. And with the month just being about ready to end, maybe what I'll do is just throw up the monthly chart here. Not going to be much data yeah, that's actually not very useful because it's such a newly listed stock. But yeah, 1037 down there. So there are some levels to the downside that if we do pull back to 1050, could be a dip buying opportunity. If we pull back to 1037, could be a dip buying opportunity. But if we start to close below 1037, that is where I would get a little bit concerned. It could always just be a fake out below it, just like we've seen, fake outs above and, below as well. But if we do start to close below 1037, that's kind of, starting to put in lower closes. That would get me a little concerned because actually the lowest close that we see over here was from June 17th, and that closing price was at 1038 with the low on the day of 1037. So really don't want to be seeing closes below 1037. That will be a level to reassess. And if it does get to that level, I imagine this is at $10, this alert that I have here, $10. And then I guess I do have one lower, which I believe was the 52-week low at 954. So if we break below 1037, I would think 10 is very likely. 954 might be visited again. So good to keep that in mind. But yeah, let's now get over to some of the options data to look that up. And so Webull Bull over here, these are some of the options contracts that I do watch. And some of them I hold, some of them I don't. I think, yeah. And let's see. Yeah, so the one that I currently, I guess I have one contract, and that is the $30 strike call. That expires about 200 days from now on January 16th of 2016. And the reason why I got a contract of this is if you notice down here, the low for Friday the 27th was 50 cents. And a few days ago, I'm not exactly sure, I think it was this day on the 20th, the low was 45 cents, and after that was the low, I had placed a dip buy order at 50 cents. It didn't get filled, and it was just a day order, so I didn't take advantage of the lows that followed. And then it started to go up above 50 cents. The low was 55 cents. And then, on Friday, the low is 50 cents. I did get a fill. So I have one contract, and the way that these contracts work is 50 cents times 100 shares per contract equals $50. So I'm risking $50 on this. And I think I meant to mention this at the beginning of the video, but I might just look over at my phone to see what my strategies are with these, because I don't do trading on my computer. I just do it on my phone. And so for this contract, I just have the one at 50 cents. I actually don't have a limit sell order placed on this one. But, I'd be happy with this going from 50 cents to $1. That's a 2x. And even if it goes higher than that, that would be, I'd miss out. And, with all of this, again, I think I meant to mention this at the beginning of the video. But let's see, I'll just add these contracts to the watch list. But at the let's see, with all of these, I'm going to be selling before the top is in, and that's the way that it works. And so I'm not going to FOMO chase or anything after I've already exited. Make decisions and go with them. And so I want to add this to, I believe, the TRL list. Intel is one of them as well. And then Mara. I should have done this before, I'm sorry. And then Unity Software. Okay, and one of them, on the note of, it's taken off, QuantumScape, I no longer hold any shares or contract, but over here, I sold out of this basically at 50 cents because I have experienced contracts gapping up and then pulling back, and then they go to zero, and then I lose money. And, fundamentally, which I did go over in a recent video on QuantumScape, the fundamentals are there. I could have basically 5x'd my gains had I held, but I didn't, and that's fine. It is what it is. More than 5x'd, I believe. But yeah, I mean, it pulled back to 93 cents. So, the high over here was 152. And maybe it doesn't get up to 10 by January 16th of 2026 and it expires worthless. So that is something good to consider, good to be paying attention to. But what I wanted to talk about was the Webull contract over here, that it has hit a high of $1.40 in the past. So if I do think that it's going to 30, so actually, yeah, let's think about that. So $1.40, that was on May 20th. So what was the price of Webull on May 20th? May 20th? That's crazy. That's over here. So, okay, so the reason why we don't have, so this is May 20th, this contract didn't exist prior to May 13th. So it was newly minted, it was newly created because Webull had such a volatile move to the upside, hitting a high of almost $80, $79.56 during market hours. And so, with this contract being a $30 strike, I think it's actually pretty reasonable. That gets up to around, do I still have that fib? Yep, that's still drawn intact to that low. 26.55 is the 236, so that's right around $30. So yeah, I think it's pretty feasible that Webull could be getting to, $30. So what I might do, and again, I don't I think with options, it's really good to not be greedy because I've had this with Unity, I've had this with GameStop, AMC, others, where it's like, ooh, I'm going to trim some at a 2x for an options contract. But then it's like, but maybe I get a 3x or maybe I get a 4x. And then, it goes to 3x, but it doesn't go to 4x, and I'm left holding the bag. But considering that, on May 20th, over here, it hit a high on that day of $13.19 on May 20th, when the high was over here. Oh, that was May 21st, sorry. May 21st. So over here, May 21st, the high was 13.53. And, basically, I'm expecting this to go up to around 14. Another thing with options is that, maybe the stock price does go up to $30, but it goes up like this. And so in that process, when you have these little bits of consolidation and price going down, the premium on those contracts is going to be going down. So it is good to be taking advantage of moves like this. And so since, it was around 1340, that's where I plan on selling my shares. I do have a larger share position than contracts. I think I've got 60 shares, not that big of a position. Would be nice to have 100 so I could sell covered calls. But I just have the one contract. So yeah, I'd exit at actually, what I probably want to do. I think this is good with options because, fundamentally I can look at the chart and think, oh, this is probably going to bump into resistance around 1340, maybe form, that inverse head and shoulders pattern. And when it does get up to there, it would start to pull back. And so maybe what I would want to do is sell my share position at 1340. And I'm actually just going to look at my phone to see what I have for a limit sell. I actually have a limit sell at 1391 for all 60 shares. You're going to hear a beep because I'm going to adjust that. And so what I'm going to do is I'm just going to adjust that to sell 20 at 1391. And you can see that not modified notification. And then I am also going to place a sell order for the remaining 40, but at 1340, because that corresponds with this level that I have drawn out here. I do think it will go higher, but I don't need to be holding this forever, and I'd be happy with that, with those gains. And so with both of those orders placed, when 1340 does get hit, that's when I would look over at, hey, what's the premium for the contract that I hold? And that's when I would want to sell. Maybe it's just 55 cents when it's up there. Then I'd sell. I'd take a 10% gain. Nothing too exciting, but it's something. Or maybe it's back at 140, which would be a more than 2x from a 50-cent buy. So that would be nearly a 3x, but maybe it's higher than that. So if I were to place a limit sell at like, $1.40 or maybe $1.50, so I get a 3x, 3x, I 3x my money, turn 50 cents into $1.50 or $50 into $150. But, maybe it's at $2.50. And so, if my technicals are based on the chart, I should use that as my guide. And so once I sell here that first lot of shares, then whatever the premium is, I should exit that position and then see if my remainder does go up to 1391, which I believe is 20 or 30% gain. I'm not sure. I like to go in increments of 10%. But yeah, that's kind of, my thought process there with that. But let's look over. And also, I should note, options, very risky, can expire worthless, so good to be in and out of those. And a rule of thumb, which I'm kind of breaking by what I'm saying here, is that, I think it's good to sell contracts before shares. And so actually, yeah, but then if it goes up to 1340, then it's like, okay, I've broken that rule. I was thinking maybe I placed an alert at 1340, but no, because then maybe there gets to be some FOMO, some emotion. And so if I trim 2/3 of my position at 1340, then it's like, okay, no big deal. I'm still holding some shares, but I broke my rule of selling shares before offloading contracts. So then I should sell that contract, and then I can just hold the remainder of my Webull position to 1391 or whatever. Maybe I trim, or maybe at that point I just put in a stop loss. That might be a nice idea. So then there would be no risk of losing money, or at least very little risk of losing money. But yeah, let's look over at the data over here. I'm just going to expand this so we can see it a little bit bigger. Hopefully Ed's head doesn't look like it's in the way. But what we can see for Fridays, this is data for June 27th, is we have net call premium coming down pretty massively. So we saw a drawdown net call premium of about $375,000. But we actually saw more of a drawdown in net put premium, which was flat. As you can see, the red line up here being more or less flat, but then we saw some pretty big drops over here. So we might actually want to look at that data to see what those drops corresponded with. But we see a drawdown of more than $500,000 in net put premium as the stock price in yellow is coming down. And we do see that the volume was red on the day, which does suggest selling of both calls and puts. And since puts were more negative, that suggests more selling of puts, and that, the bottom could be in. That is what, selling of puts, it's not necessarily bullish, but it's like the end of bearish, getting into, bottoming territory is kind of how I view it, or at least how I understand it. And, yeah, so if we look at the past 2 days, so this would include the data that I did include in the post, we can see that, net put premium did come down by the end of the day over here by, almost $300,000. But then over here, it came down even more. So it does look like, and with the stock price going up, pulling back some. And so maybe we're seeing a little bit of, bottoming before maybe the next leg up. But what I want to do is just look at the 1 day here. And specifically, I want to pinpoint the times that we do see these drops here. And let's see. So this was at right around 2 p.m. This was right around 3 p.m., 3:10, somewhere around there. So I'm just going to look at the flow data over here from Unusual Whales, and I'm going to type in bull up here. So it filters the data to that. I could do an AI filter builder, but I'm not going to do that. I'm just going to do a time range, and I will just do for the 27th. I'm going to apply that, and then I'm going to adjust the minimum premium. I'm going to, let's see, I'll do 100,000 as the minimum. And so we can see two big orders, one of them right before close. This is one of those basically that I was talking about at 3:10. So looking over here, this one that was at 3:10, we saw this drop. And so that was a drop in net put premium from about 319 down to 526 down. So that was a difference of, about $200,000. And so from this flow data, we can see this was about $200,000. Crazy how math works there. And that K is purple, I believe, because that, let's see, what does that purple mean? I think that means net. That the open interest was bigger. I'm not really sure. But anyways, 4th of July sale ends July 8th. So you can get 20% off if you're upgrading or 15% off to open up a subscription. I really like Unusual Whales a lot, although I don't utilize it as much as I'd like, just because it takes time to dive into the data, think about it, and with work, other things going on, it's tough. But anyways, I'm rambling again. Looking at the put contract here, this is a $15 put that expires on July 18th. And this does look like, based on the bid, this looks like it was bullish because it seems like it was being sold. And so if we do open up that contract, this is that same data that we were looking at. We can see this, the candle premiums over here. And so this does suggest that there was some selling, but maybe we don't see. Ed's in the way, so I'm going to have him step out of the way. Over here, we did see on Thursday, there was a volume traded of around 1,000 contracts, going from an open interest of 279, increase of about 1,000, to have an open interest on Friday of just shy of 1,300, with a volume traded of 1,600 contracts. And so maybe those were closed. I'm not really sure. If we do go back in time, let's see. Let's just do the past 30 days. Yep, we could see these big puts here that were opened or closed if we look at the past 90 days. Yep, so I would imagine that those puts were sold to open because they were not bought in the past, because we don't see those big spikes in volume in this. Actually, we don't even need to do 90 days because the data only goes back to May 1st. So let's do 45 days. Does that include it all? Yep. And so there was no buys of those puts. So nobody was effectively shorting it on the way down. But then it looks like people were selling here. And so if somebody is opening a put, selling to open a put, which is a cash secured put, I guess I'm going to do some math on this. This video is going to be a lot longer than I was anticipating, but this is helpful for me. Hopefully it's helpful for you. This is honestly why trading can be kind of boring, because it's just pulling out the calculator, doing some math. And so let's say, I'm just going to, since we see this picture here that these were, the only big candles, if we just look at the past day, we could see this one. What's that? Volume has exceeded open interest because it's 1,600 there when open interest was just shy of 1,300. So that's why there's an exclamation point there. But we could see these candle volumes, 451, and over here, 500. So it's about 1,000 contracts between these two. But let's just make the assumption that it's just this one candle premium. And actually, this is This one over here, I did the filter by 100,000, but I think it was the same contract because looking at the data over here, this drop was right around 2 p.m. And so if we look over here, this candle was right around 2 p.m. So it's the same contract. And this is around $260,000. And then this was, a drop from about 86 negative down to around 300. So that's, 86, that's like 220, 210, something around there. And we can see here this premium 260. So it's not exactly right. But yeah, so I guess maybe, since I'm talking about the calculator and mental math can be a struggle. So, it's final minus initial. So about 302,000 minus the initial, final minus initial, 86. 216, yeah, not 260, which is what we're seeing over here. But that's also, just one drop that could have corresponded with multiple buys and sells from different people or different positions. But yeah, we do see this here. Maybe it's the same person, maybe it's not. And so let's just make the assumption that let's just do 500 for an easy round number. And this is a strike of $15. So actually, no, let's just pool it all together, just get the maximum amount. So 450. So let's do that. Simple math, 451 for that candle volume. And then this candle volume was 564. So plus 564, 1,015. And let's just, to keep it simple, let's just do 1,000. That's the number that we're going to work with. And so if there were 1,000 contracts purchased and they were purchased at an average fill of $4.58, we can then multiply 1,000 by $4.58 and then multiply that by 100 because each contract represents 100 shares. And so this is the amount of premium. Wait a second. 1,000. That's it? $4.50 times 100 times 100,000. Yeah, okay, so it's like $500,000, okay? And so this is the amount of premium that the person collected. But they had to secure these puts. And that was at a strike of $15. So what I'm going to do is I'm just going to make that number negative. And I'm going to add to it 15 times 100. So that's going to be 1,500 times 1,000. So that's $1.5 million. So plus $1.5 million. So this person, basically had to have $1 million to secure the puts that they're making an agreement that they will buy, these shares at $15 strike. That would be $1 million based on the difference between, what they collected in premium. But if Webull closes above $15 on July 18th, 19 days from now, then they would get their $1 million back and they would have collected that $458,000. So this is bullish over the course of the next few weeks, I'd say, because this person is betting, either $1 million to then buy all of these shares, which would be about 1,000 shares, in order to, so that's they're saying that they think that Webull's worth $15, basically. And yeah, so I mean, I don't really need to get into any more of that. I think I've spent already about 40 minutes just talking about one of these tickers. So maybe it's a good time for me to get back to this and talk about the next one on the list, which is going to be Intel. And so I said that of these four, Intel looks the best, and I don't think it performed the best. I think actually Unity performed the best on Friday. But if we look at this, we can see that net call premium in green on Thursday went up by $2.7 million. Net put premium went up by just shy of $700,000. It does look like the volume was green, so these were all buying, while the stock price was flat over the course of the day on Thursday. And if we do consider max pains for Intel, the max pain was $21.50 for Friday. And at close on Thursday, it was at $22.50. So if we do go over to the max pain tab here on unusual whales, let's see, Intel. So let's look at that. The max pain for Friday, last Friday, the 27th, was still $21.50. What did Intel close at? Intel closed above max pain, although this does look like it's kind of a big wick and that it might be putting in a top. So we'll have to go over that, where it might be pulling back to. It does look like max pain is $21.50 for the next few weeks. And so I think that this could get kind of pulled back into that, or it could be breaking out. And so my thoughts on this, basically what I had talked about, this level down here, 1886. I'm going to have to switch this over to the weekly time frame. And I might have to even go to the monthly time frame, because I don't get why this got screwed up. So what was I should just check what was the low. 692. What was the low over here? 692. So I'm just going to, just so I see where that level is coming from. Let's just make sure that's right. 692. And then 62.70 is the high up here. So I'm going to lock that into place. And so we can see that Fibonacci retracement. And this, like I said, the monthly time frame, this is going back to 2009, $6.92. Following that, stock price went up over the course of more than a decade to 2021, went up, where's the percentage? About 750% to the upside. And so we've come back to the 786 from that, 1886. And if I do switch this over to the daily, we can see that we did pierce that level. We bounced, went higher. From that, I do have this Fibonacci retracement, which is not really going to be that useful unless maybe I want to add the 618 to this. And so we did come back to there around 20, but we did not come back to that green line. So we're putting in higher lows. So I think that's good. I'm just going to make that green. So it's just like, okay, those were dip buy levels, clearly. But now, we're going up and we put in a higher high. What's the RSI look like? We have put in a higher high there, so there's no bearish divergence there, so that's good. But if we do pull back, where might we pull back to? So I'm going to do this retracement from the low here, following this high here. The low of 1931, which was hit on May 30th, and then going up to the high from Friday. We've got the 618, so just like we pulled back over here, the 618 this time is around $20.86. So I could potentially see it coming down to there. That does also correspond with this yellow line that I have drawn up here at 2080, which is just like the consolidation highs over here. We did, form some support there, bounced up, gapped up, And yeah, did act as resistance here before gapping up again. And so, yeah, I mean, maybe 21 bucks could be pulling back to that, but maybe it doesn't. Like over here, this big picture one, you know, going back the monthly time frame, came back to the 786. Then here, came back to the 618. And so now this one, excuse me, I don't know that it'd come back to the 618 again. Maybe it just come back to the 50%. So I'm just going to add that up there, and that's around 2134. So I might just add an alert there at 2134. And I don't think it's coming back down to 1890. Oh, and I need to adjust that alert so it's below. There we go. All right, so those are some levels that I think this could be pulling back to. But also, it could do something, you know, like this, pull back to around 22, and then go higher. In 2203, that was, it looks like the opening price from January 21st opened at 2203. And that hasn't really been that significant, but we did get, you know, rejected above it. When we got above it here, got rejected. And then here, got rejected again. Now we're above it, so maybe we pull back before starting to move higher. So that's something to consider there. But now I think, you know, I'm not sure of the order that I'm doing this, but let's look at the contract. This is one that I hold. This is the $50 strike call that expires again in January of 2026. We've got about 200 days between now and expiration. And I am, let's see. I'm just trying to think, you know, I want to like follow up with this stuff on Monday. So I've got like the flow over here for Webull. This is one that, you know, I'm just going to have to keep that up. I'm just going to have to keep it up and come back to it. Or actually, I can just add this. Add to watch list. There we go. Cool. So then I don't have to worry about that. So I can then follow up on it more easily on tomorrow, on Monday. Okay, but then, yeah, looking at Intel, I'm just going to expand this. So for Friday, June 27th, we did see net call premium increase, but then it did pull back some, increased by about $830,000, whereas net put premium decreased by about $1 million. And with this, we don't see, you know, big spikes or drops, you know, like we did see big solid moves that would be corresponding with the big order. We didn't see anything like that with Intel. Maybe a little bit right here. This spiked up from 120,000 to 970. So that's a pretty big order. Yeah, so I'm going to want to look at that one. But I'm not going to get distracted by it too much right now. Or maybe I do. No, I'm going to first go over the contract that I hold. $50 strike January 16th. Why do I have the $50 strike? I think because if we take a step back, we have 50 bucks that was hit in December of 2023. And so I could see price heading up towards that direction. But like I feel like Webull is much more likely to hit 30 by January than Intel is to hit 50 by January. So this is definitely like, you know, a swing for me. But I think it's looking really good. And, you know, for me, for Intel, I only have 4 shares. My average price is $19.10. I'm just going to hold those. I'm not going to worry about them. It's such a small position. I want to have more, but I like where my average is. And so my way to get more exposure to Intel is by buying this call contract. And so for the $50 call, strike call, I had some before at like an average of 18 cents. But then I got out And so this is that contract. And now I have 3 contracts at, excuse me, 22 cents. So I'm at break even effectively. I do plan to buy one more contract if it dips to 20 cents, but I'm just going to be chilling, not too worried about it. And for this, I have a sell order for 2 contracts at 44 cents. This has historically been up to like $1.09. It's been up to, $3.84. So there's definitely a lot of clear potential for this to get higher. And so like looking back on July 17th, when it was at like $3.84, that's when price was at 37, about almost 37. And so, I mean, really, I think for this is where I want to use the shares that I have to motivate removing my sell order. So for the 2 contracts, you can see it, cancel the order. Ed's not in the way. I'm going to bring Ed back so I'm not doing this alone. And so I don't want to sell my shares, but this is about making money. It's not about falling in love. I have 4 shares, so I could sell 1. And so maybe I want to sell one at a gap fill at 28.87. And so I'm actually going to do a little bit of math here. So what's 28.87 divided by my average, which is 19.10. That's about a 50% gain. So now what I'm going to do is I'm just going to take 1.5. So for a 50% gain, and then I'm going to multiply that by 1910. 1865, just below 1887. Gap fill, I get a 50% profit, and I still hold 3 shares after that. So I'm going to place a limit sell at 28.65. And then when that gets filled, then I would look over at the options contract that I have, see what that premium is. Maybe it's well above 44 cents. Maybe it's $1. And then I would exit those contracts. So that seems reasonable to me. And all of these, the shares here, I'm just going to leave it. But for all of this, with the contracts, maybe I get spooked. Maybe something happens with Trump, with the economy, with the Middle East, who knows, with tariffs. And maybe I decide to just exit the, the contracts before this gap will be filled. But I think that's a good indicator for getting out. Or do I want to sell? I mean, that's fine profit. I think that there'd be some resistance there. And then maybe I could buy back on a dip. And then that would make me more inclined to buy back on a dip. Because an alert I might dismiss because maybe I get 20 alerts that day and I overlook the Intel alert. But a sell, I'm not going to overlook that. So I stand by selling one of my 4 shares, my small position, to then trigger on, hey, I should get out of this because if my average is 22 cents, this goes up to 44, great, I make 2x. But maybe I can make a 3x, a 4x, and that would be based on what's going on with the stock price. Hit this gap, then recognize maybe it's going to go higher, maybe it's going to go to 50, but maybe it takes 6 months to get there and it expires worthless. So, or I just don't make $22 on it. So, the goal is to make money, not to diamond hand, not to fall in love, not to hold forever. So, yeah, I mean, that's pretty much it with Intel, other than wanting to dive into this spike here. So just like I did with Webull, I'm going to look at, this time right here at around 9:36 a.m. is when we got that spike. So 9:36 a.m. So we're going to go to the flow data. I'm going to exit this. And I'm going to type in Intel here, leaving the same filter as just being June 27th and the premium being 100,000. So it does look like we've got a lot of these orders here, hundreds of thousands. But 936, this looks like it was part of a flow alert. We can click on that for full context. And for this $21 call that expired June 27th, so the day of. So really, this is not that going to be telling of what's going on, because this, was this open? I'm not sure, but it's $170,000. So there's this one at 936. So it was like 1,000, 300, 300, 300, and then 170,000. And so that's really the one that stands out. In total, this is about 1,000 contracts. And this contract is expired, so it's not really going to tell us too much. And this expired in the money. Because if we look at the chart, expired in the money. So I don't know that it would have been profitable. Let's click on this one here. Let's click on that so we can expand it. And I'm not necessarily going to look at the data down here because it's expired, so we're not going to be able to tell if it was open or closed. But what we can see is this candle here at the beginning of the day at like 9:36. It looks like it was on the ask side. Candle volume is 6,000, apparently. And there were no big orders after that, or not at least the same size. The stock price did go, or the premium price did go up, but nobody sold up there. We look back, let's say 90 days, the full extent of this, we do see a lot of calls more recently. And this looks like it just goes back to, for this specific contract, which is expired, it just goes back, I think 45 days should include it all. Yep. And there's a lot of buying here. Buying, selling, trading, whatever. I'm not really sure. But yeah, this was down and then went up, but now this contract's expired, so not really too useful there. Nothing to follow up on with that. So with that being said, I'm going to come back to here, but I do have a cup of coffee in front of me that I've been neglecting. I'm going to have a sip of that. And then now I will move on to the next one, which is Mara Holdings, ticker symbol MARA. This one I thought looks second best as far as the data over here goes. And we can see that net call premium increased on Thursday by $1.6 million, whereas net put premium came down by about 129,000. You do see stock price kind of floated up. And I do believe that Bitcoin has gone up a little bit over the weekend. Maybe it's forming a bull flag. Maybe it's getting into some resistance there. It is forming a CME gap, which was around $107,000. So this could be pulling back to fill that. I would like to be adding around 100,000 if we do pull back to around there. But if we don't, that's fine. But I do think that Bitcoin generally is, has been forming this bullish downtrending consolidation. We just need to see some closes above the prior highs, and maybe we see a pullback before doing that. And so Mara is going to relate to that because Mara is a Bitcoin mining company. And but yeah, this does look good with net call premium increasing by $1.6 million. And then if we do Look down here. I forgot to mention this, I believe, but considering the above and the closing prices on Thursday, Bull looks most bullish, most likely to trigger a gamma ramp or squeeze, followed by Intel. Just went over both of those. And then Mara tied with Intel. And then U looks most likely to be pushed below max pain. So we're going to have to look at those two. But now we're just looking at Mara, so we'll start there. So the max pain for Friday was $14.50. And, the closing price on Thursday was $15.27. If we do look at the chart, we did close above 15, so that's good. But we did get pulled back. Let's see what max pain was on Friday, because it does update every day. And let's see max pain right here. And I want to look up Mara. Come on now. This is still saying Intel. Sometimes this gets a little bit wonky. But there we go, Mara. Okay, 1450, stayed 1450. This coming Friday, it's 15. And we're right around there, so there could be some suppression around that. But then it looks like it's 1450 and then 14 for a couple weeks. So, yeah, I mean, we'll have to see, do we close on Thursday, so not Friday, Thursday the 3rd, above 15. And, yeah. So we did close above max pain, so that's great. But we only closed one strike above max pain. It would have been nice to close above like 1550. But yeah, I guess so. We'll look at the chart here. I've kind of drawn this out a bunch. I am spending a lot of time on this video. It's been an hour now, so I'm probably just going to zip through the chart for Mara as well as Unity. But here I do think that this could be, upside move, bull flag, and then it breaks higher. And I don't know, I can never do anything halfway. I've got to really dive deep. So let's see. What's this light blue? That's short term. Let's not do that. Let's instead adjust this one to 50%. We did pull back to that 1352. But I think I need to adjust this. No, that's the high. 17. Just make sure. 1727, 1981. So those do look good. And proportions, I'm not going to do the 786, the 618, or the 100% because it just gets to be too cluttered. So we just got that one there, and that to me makes me think it's a buy at 1350, 1352. Although we are putting in lower lows, lower highs, just like I was talking about with Bitcoin, so we could continue to do that. And this could come down to 12. And so maybe what I want to do is actually adjust this Fibonacci retracement to include that 618, which would be getting to around the 12 territory. And so I'd be, following that doodle a little bit. But what I want to do is a Fibonacci extension. So just going from 981 up to 1727, and then down to the low that was hit on what day was that? On June 23rd, 6/23. The low was 1349. And so from that Fibonacci extension, I got these other ones that's what I just drew, I think. Got the shorter term one. I don't like that. So the one that I just drew, coming down here, where is it? There we go. I'm going to make that light blue. And $21, 2092 does seem to correspond very nicely with my doodle, as well as with this red uptrend. And so $21, I think that's probably going to be some resistance for Mara. And that red line is going to be based on, going back to the lows from October 6th of 2023, consolidated above that level over here with some fake out breaks below, then going higher, and then did consolidate here, formed a bear flag before going lower. And so, yeah, I see that as being a potential level of resistance, and that lines up. The cursor is at July 30th, so about a month from now. Maybe we could see Mara at around 21 bucks. And also related to this, I did talk about this in Crypto Corner Sat Stacker, but let's see. I just want to pull up David Sachs, who is the crypto and AI czar. I want to pull up his official government account. And this is something that he had posted. July will be a big month. That was with the bill signing for the Genius Act, as well as the Clarity Bill going to the Senate. And so this is the stablecoin bill, and this is the market clarity bill. So both of those are going to be very important. This has passed the Senate, I believe. This is going to the Senate. And so July is going to be a big month. Maybe we could see Bitcoin rallying. And so maybe we could see Mara heading up towards 21, and then maybe heading up beyond later in the year. And, you know, if Bitcoin is to be making new all-time highs, you know, Mara has not been making new all-time highs. But 4 years ago, in 2021, during, you know, 4-year cycles with Bitcoin, Mara hit a high of $83.45. So maybe it could be going back up there. And I think that $50 is a nice target. That is the contract that I hold. Looks like I drew some levels here. Just kind of curious about that. But let's actually just look at the contract here for the data, and then I'll dive into the chart there. But yeah, this is the $50 call, strike call, that expires again January 16th, about 200 days from now. Nothing too exciting with this, in all honesty, but that's the one that I hold. And I have a pretty large position in this. Excuse me. I do have some shares, and so I'll just mention that, I guess. I only have 7 shares. My average is 1505, so I'm about at break even. And, you know, I think I did recently add 1 share. Again, nothing exciting. At 1362. I'm not sure why I didn't buy at 1352. Maybe I had a typo. No, actually, that's crazy. The low over, I'm not sure. That was on the 23rd. 1362. I don't know why I did it at 1362. Should have been 52. But it's probably because one of those levels that I deleted. I should have drawn it like this, 1352. I would have gotten a fill. Yeah, so, you know, good to consider how you draw the fibs, because they can be drawn in ways that are fundamentally more sound. I think that the way that I've drawn this is a little bit better than it was before. But yeah, 1362 is my last buy. And maybe this is a good note for me that I want to, maybe I should, I don't know that I'd be going back down to 1352, but 1352 for Mara. I'm just putting it on my little notepad just to consider that. And, but then as far as the contract goes, this is one that I had a contract that expired worthless, and I recognized that, so I sold it at a loss to get this other contract, which is a $50 strike call for January. And so my average, I've got 18 of these. My average price is 77 cents. So if we pull up the calculator, that's 77 cents times 100 shares per contract times I have 18 contracts. That means I'm risking about $1,400 on this. And with it, I'm not planning on a 2x or anything with this. Basically, I just see the highs over here around 118. Some percentage, increment of 10. Let's see, 115 is where I have a limit sell. So I'm just going to do 115 divided by, what's my average? 77 cents. It's about a 50% gain for me. I mean, I don't know. I'm a little, I feel like maybe I want to lower that. Like 77 times a 40% gain. 107, 108, 100? I don't know. $1. But yeah, I have 16 of the 18, the limit sell there, and then I guess I just reassess with the other two. But yeah, I don't know. This could be going to zero again, but it could also be going up to, man, over here. This was November, $10.65. So this could be going up pretty massively, especially if Bitcoin is to go on a rampage. So, yeah, but then, I mean, I'm just going to expand this. We can look at the data from Friday. This was not as exciting. If you look at the bear bull slider behind me, the prior two are about 50-50. I guess this one's also 50-50, but it's the first one that clearly says bearish, or it notes bearish. What we can see is the net put premium in red, kind of flat but positive. And we see it up $173,000. Net call premium was negative over the course of the day, down about $700,000. Did see some pretty big drops, net call premium as well as net put premium. And yeah, I'm not going to dive into that here because it's going to take too much time. But stock prices, we can see it did go up a little bit, but then pulled back on Friday. And so the 2 days, this is what I posted on X. This did look really good. Oh, and another thing, I feel like I meant to mention this at the beginning, is that a lot of times what I see, whether it's with contracts, with shares, whatever, if something seems really bullish one day, the next day it might flip, might pull back. Why? To shake people out. Psychological game, psychological warfare. So, yeah, this looked really good to me, but then it pulled back some. So it's not going to be, an in and out one day, the next day type of thing. And with that, the expirations of these contracts get to be a little bit risky. But now, yeah, I'm going to come back for the final one. Just going to have another sip of some coffee. And just going to go over Unity Software, ticker symbol U, which looked the worst based on the Thursday data. And we actually see the next, I forget what I was going to say. I got distracted by this saying next. Now it's saying something next. Yeah, we'll look at the data for tomorrow, from Friday, not tomorrow. But yeah, net call premium was down by about $1.5 million. See that drop in the net call premium for Thursday, 26. And then net put premium had dropped about a little over $500,000 down. So that's a little bit less bearish, but this more bearish. Although we do see the volume was green, so that does suggest buying, as the stock price was, hanging out around 23. So, oh wait, and actually go to the next post directly from here. Oh, cool, because I tagged it, or I added to it. That's pretty cool. I don't really want to do that. I just wanted to scroll down here to look at the Unity software. Max pain for Friday was $23.50, and we had closed on Thursday 10 cents below that, so that wasn't looking so good. And I did say, we'll see. I'm probably wrong. And I was, effectively, based on this. U looks most likely to be pushed below max pain. So max pain was $23.50. Let's pull it up. Max pain over here. So Unity software, type that in. And it was still $23.50, June 27th. $24.32, so we closed above max pain, so looking good. Max pain was $23.50. This coming week, this for Thursday, the 3rd, $23.50, and then we got $23.24. Maybe we're getting into gamma ramp territory, maybe we're not. I have no idea. And for Unity software, I definitely don't have as many shares as I would like, and I got so much crap drawn on this chart. So I can, I'm just going to make sure that's drawn to the levels, 2828, 1533. Proportions, I can get rid of the 236 because we broke below that. The 382, we did dip to that, but not quite the 50. And we don't need the 786 there. So yeah, I mean, we had dipped to whatever this low was. I'm going to delete the 50% just because I don't want to have that clutter. And over here, we dipped to a low of 2217. The 382 is at 2333. Currently above that and looking good, although we are below this uptrending orange line, which goes back to the lows here, 1390. Bounce from there. Fake out break below, but bounce from there before breaking lower. Consolidated below, forming a bull flag, and then move up to here to that red downtrend. This doodle did not play out. And yeah, got this red green line there. 2366, you know, so maybe we're putting in, no, we're not. I was thinking maybe we're putting in an inverse head and shoulders pattern, but that would not be valid because, you know, this doesn't connect up there and this went lower than the head. But bigger picture, left shoulder, neckline, head, inverse head. So maybe we're making our way up to around 45 bucks, but then we maybe have a pullback before getting a measured move up to around 75. It's kind of how I'm viewing that. But yeah, I mean, let's see. Gap down here, but I mean, there's not too much clutter on this. So let's see what this red downtrend is. That, again, could be neckline of an inverse head and shoulders pattern. Yeah, it's a pretty notable downtrend there. If we do get a move up to there, maybe that could be resistance. That would be around 27, so keep that in mind. But if I do a Fibonacci extension from the lows here at 1533 up to the recent highs here and then down to the low, I'm just going to make that light blue. So, and let's see, that was 1533 was the low. $15.33. I think it was lined up, but I had just nudged it. $18.28. And then, dang it, this is why. $22.17. Yep, I think it was everything was lined up. I just nudged it. So I'll lock that into place so I won't nudge it. And we can see where that could be taking us to the upside. So the 100% move, the extension from that would be putting price around $35, $35.12 to be precise. And that kind of corresponds with, you know, the red line here going across and around 30, 31, somewhere around there, $30 to $31. Not $30.31. This is at $30.88. So there could be some resistance around there. Also do have the 32.25, 100% extension from this Fibonacci extension that I have there. So that's something to keep in mind. And then the 1618 for that, as well as the one that I just drew, is around $42 to $43, also corresponding with that neckline that I kind of drew out. So that's where I could see Unity going by the end of the year, maybe. I don't know. The way that I have doodled this out, you know, time is a huge component and things always take longer than you expect. You know, I had this doodled out to be, you know, basically by July, it could be at like 45, but maybe it takes its time up to here. That would be by the end of the year, beginning of next year. It could be around 43, 45. So that makes me feel like my strike is a little bit risky, and that's the $65 strike that expires in January. Just going to pull up the data over here. This is the contract that I hold, $65 strike that expires in January, about 200 days from now. And the data that we saw from Friday. Did see a big spike up here at the end of the day. So net call premium was negative 235, almost negative 236, and then jumped up to around 34,000. So it's about 200,000, $250,000 move, somewhere around there at the end of the day. Not going to dive into that, not going to spend too much time on it. But yeah, I guess I'll mention, as I think I have with all the others, my position size. I definitely want more shares of Unity. It took me a while to gain conviction in this. I was charting it around here, but I didn't know enough about the company. I didn't have enough conviction. Now there's a lot of great posts from the Bronx Viking whenever Unity software takes off. Posts that say like, I love #you, things like that. And yeah, it's just fun. It's nice to, be following other people who are into it, who are very good with the unusual whales data. And so when I first was introduced to it, it was based on a request from Stream. And it took me a while to really have that conviction. And so I only have 26 shares. My average price is $22.18. I do have a buy for one share at 22, which I don't think is going to get filled, sadly. And so that's kind of why I've gotten a little bit more aggressive with my contract, which I could have, cashed out over here for a good amount of money. Instead, I continued to hold. And this was in the end of May. Over here, this would have been in February. I'm not sure if I had it then. But yeah, I just held. 786 is at 39 cents, currently around 31. I have 13 of these at an average price of 50 cents. So if I pull up the calculator and I do 50 cents times 100 shares per contract times 13, I'm risking about $650. I do have a limit sell at, $1 for 10 of them. But maybe what I want to do, maybe I want to use my shares as a guide. That, what's my average share price? What did I say? So maybe I'll do 35. Let's see. My average share price, $22.18. So let's say just, 35. Let's just, approximate. Then divide that by 22. It's about a 60% move. A 60% gain from 22 to 35. But let's say from 22.18, I just get a, 1.5, 50% move. So that'd be like 33.27 or 1.4, so 40% gain, 31. I mean, because in the past, what's happened with Unity is, it's gone up to levels that I had mapped out, and I didn't sell, and I didn't take all of my profit. I think I should have maybe. And so I think like 31 says, yeah, 40%. The goal is to make money. So maybe what I want to do is just have an alert around this 30.88. And then, so then I'd be alerted. Maybe I don't see the alert. And then, so maybe what I want to do is 2218 times 1.5, so 50%, 3327. To be honest, I think that's probably getting greedy. Greed is an enemy, I mean, if I just sell one share, I don't know, I'll leave the alert. I don't want to be greedy. So 2218 times 1.4, 40%, 3105. So I'm just going to place a sell order for one, my small position, at 3105. 3105. And, you know, that's going to be sad. It's going to be tough. But that's 40% gain. Can't complain about that. And maybe what I want to do, because this alert is right around that level, and maybe we don't actually get there, maybe what I want to do is just put this alert at 30 bucks. You know? So I'm aware of that when it gets up there. And then with that being said, you know, I had, because I always get out of contracts too soon. It always runs more. And so like I have a sell order placed for 10 at $1. I'm going to cancel it because I'm going to be guided by the chart here, the alerts. And yep, so that's removed. And yeah, I don't know. So this is kind of that overview. Hopefully it was helpful, going over Webull, going over Intel, going over Mara, as well as Unity software, sharing my thoughts, kind of going over what I'm doing. About an hour and a half long video. I was hoping to keep it less than an hour. Sorry I didn't spend as much time diving into Mara and Unity software, but then you get, you know, the perspective from Intel and Webull, the deeper dive, you know, what I'm thinking with this stuff, what I'm doing. I may end up losing money. I'm just a retail trader trying to learn. Documenting as I'm going helps me. Hopefully it's helpful to you. But, you know, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I'll try to see you guys tonight for Ticker Request Live, streaming right around 10 p.m. Eastern tonight. So I'll see you then. Take care and have a great close to your weekend and start to the week. And yeah, I'll see you guys later.